There are four main skills you must have a deep understanding of in order to become a technical analysis master. What are these four main skills? They consist of structure. Structure is going to be your ability to read and understand support and resistance in the market and to understand how that's going to affect the market. Next up, we have trend. This is your ability to read momentum and understand what the likely direction of the market will be. After that, we have candle and price action patterns. This is going to be your understanding of candlesticks and what each of them mean, along with your understanding of price action patterns such as double tops, double bottoms, flags, and so forth. And finally, the last skill you must have a deep understanding of in order to master technical analysis is indicators. And I don't mean just understanding what an indicator is, I mean understanding the correct way to use it in our trading in order to break down a currency pair. So why is this important? Well, because your understanding of each of these four concepts is going to determine whether or not you are a technical analysis master. Each and every week we produce a video that teaches you a little about one or more of each of these skills. So if you're someone who is interested in becoming a successful trader, then go ahead and click that subscribe button down below the video to the right hand side. Click the like button to help support the channel. When we get back, we're going to talk more on each of these four. We're going to do some technical analysis on 5 major currency pairs, and we're going to help you become a technical analysis master. Most traders hear words like support, resistance, or trend and immediately stop paying attention and turn the other way because it's not flashy, right? Support, resistance, and trend is something we learn at the very beginning of our trading career. We decide not to master it so we can move on to this super flashy system that the Pip Unicorn is teaching over on So-and-So Forum because that just seems more interesting to us. But because of this, we lack 2 of the main skills that it takes to become a master of technical analysis. And in reality, the super flashy system, that's not what really creates trading success, and it's definitely not what creates a technical analysis master. And to prove that a little more, I'm going to show you a clip from last week where we used these 2 very simple concepts of trend and structure to make an extremely accurate market prediction here on the euro dollar. Let's go ahead and take a look at that clip, and I'll be right back. Let's go ahead and talk about the euro dollar a little more now and talk about the analysis we can do now on this pair. Let's start at the daily chart. Let's do some analysis. Looking for our multiply tested level of structure. We have one that the market has actually just hit, right? Right here is a level that is a thick red line. I'm not going to change it though, guys. Right here is a level that's been support and support. If we look left and throw an actual horizontal line on the screen, I'm sure we will see that this area has been tested more times. And just like that, guys, that's our 3rd test. So in a trading plan, in a strategy, you could have a rule that said when a market tests a level of structure 3 times on the daily chart, I look for a counter trend or trend continuation trade on a lower time frame. Don't go out and trade this just blindly. Don't go out and start placing trades based on this knowledge. Go out and test it for yourself. Do the preparation. Become the best. Don't take my word for it. Do the work yourself and figure out if this creates a positive expectancy over a long period of time. Create a trading plan, create a strategy based around that knowledge, and then consistently implement that in the market every single day. Just like Kobe consistently implemented what he practiced, pre-game practiced in the games, and that's what created so much success in his basketball career. So now we're looking at this level, saying that this could definitely cause some trend continuation here on the euro dollar. On the daily chart, we are in a downtrend here on this pair, right? If we look up, we zoom the chart out a bit, you can see that we've been pushing down, pushing down, pushing down, pushing down until we break through this level of resistance. We're in a downtrend. We still haven't done that. The likely scenario is that we continue down. The best place to look for that specific trend continuation move that we're talking about to continue pushing this market down, at least for us here at the trading channel, considering the back testing and trading that we've done. Again, create your own trading plan. Don't take our word for it or my word for it. But this is one of our best case scenarios, is that this market comes into this level, we get a trend continuation play on a lower time frame that puts this market into trend continuation, and you make massive profits. So in that clip you just saw, we made a prediction that the euro dollar would come up into previous support and that we would see that previous support level turn to resistance and see trend continuation out of that pair. Trend continuation meaning a break below its most recent levels of support. That is exactly what happened. And what did we use in order to make this prediction? Nothing more than trend and structure. You see, having a mastery level understanding of those two concepts can increase your ability to make accurate predictions tenfold. We know for a fact, because of the historical testing that I've done, that this level of support looking left is going to be one of the most powerful levels that we see in the market to see trend continuation out of this pair. Again, I don't know that because I'm better than anyone else. I don't know that because I was born with this information in my head. No, I know this because I've spent thousands and thousands of hours looking through historical data and testing examples just like this, where a market comes up to the most previous level of support or resistance that's also been tested multiple times in the past, and then I know that I have a statistic advantage of that level providing trend continuation. And this is not some super secret trading system. I absolutely hate when trading educators try to sell you on something that's super secret, because I know that simplicity is the key to trading success. The reason I know that is because that's what helped create success in my own trading. This is information that I give away for free each and every week, guys. It's not something super secret that you can't find anywhere. Master trend and structure, and your ability to accurately make market predictions on where the market's likely to go will increase by 10. And in today's video, we're going to help you guys master that. We also have a free beginner's course to structure and trend. I'd say beginner's course, but this course is actually pretty advanced. It'll show you exactly how I make predictions like this each and every week, that you can find in the description below, labeled Technical Trader Foundation Course. So check that out if you're having trouble identifying trend or structure, or if you want to just see the exact way I do so in order to make predictions like this each week. Again, that's absolutely free. Put in your email address and we will send you that course immediately. So let's take a look now at the euro dollar. Why did we make this market prediction? Well, like we just talked about, like you saw in the video, we were looking at the trend of this market first. That's the first level of understanding technical analysis. And what do we realize here is that this market is in a downtrend. We have a downtrend here that's going to stay a downtrend. At this point, our last impulsive break was right here, this leg I'm drawing. Because of that, this is our previous level of resistance. And unless this level of resistance is broken, which did not happen over here, then we still consider this market in a downtrend. What do we know about that? Well, we know that that means this market is more likely to continue in that downward direction than to reverse and head higher. Because of that, we already have an advantage. Now, how do we increase that advantage even more? Well, we already just talked about trend, which the market now, again, guys, is currently in a downtrend. So what's our likely scenario? Our likely scenario is a break of this level of support before we break and close above this resistance level now. But let's get back to why we have more of an advantage. We have an advantage because the market was in a downtrend. Last week we knew that. We also have an advantage here with this level of structure because it was tested most previously as support before the break of that level, and also back here as resistance. If we look left, this level of support and resistance, this level of structure was tested multiple times in the past, even further back as well. So knowing that it was tested multiple times, and knowing that the market's in a downtrend, knowing that it's the most previous level of support that was just broken by an impulsive move, gave us the ability to have an advantage and to predict that this market would continue in a downward direction from that level. Again, guys, this is not some super secret trading system. This is something I give away for free each and every week. Make sure you're subscribed here to the trading channel so that you can learn more about structure and trend, along with indicators and price action / candlestick patterns, which is something we go over each and every week. And again, get your hands on that free Technical Trading Foundation course if you're having trouble understanding any of this, where we go into a lot of detail about structure and trend. So that was what we talked about last week on the euro dollar. Now let's quickly go through what we're expecting this week. Well, obviously we just broke below. We broke support below this level of structure looking left right here. So what does that mean? That means our expectation is that we know the most previous level of support is possibly going to turn into resistance. We know that since it's been tested multiple times here, and including more times looking left, that adds accuracy to this prediction. We also know that we're in a downtrend, which adds accuracy to this prediction. So our prediction for this week is a move up into the 113.14 level here on this pair. Could happen now, could happen in a couple of days, and we want to see if we can get an entry reason there to push the market down. So another important aspect of this is that these predictions, we're not just taking trades randomly in these areas. We're waiting for predictable price action patterns, predictable candlestick patterns, predictable strategies that we use in the EAP training program at these levels in order to place trades, which also adds accuracy, and adding all that together equals a pretty accurate market prediction. So that's what we're paying attention to this week here on the euro dollar. I will try to go as quickly as possible through the rest of these pairs because this video is already getting kind of long and we've just started. So the pound dollar. Last week we were predicting that we could see a counter trend bounce from the around 1.28 level, right at these two little levels of support, which were also support looking left in the past. This would have been a counter trend opportunity, but unfortunately the market just pushed right through that level. So this is an example of when these predictions did not work out. Of course, nothing in trading is 100% accurate, and like I said earlier, the reason I trust this analysis so much is because I've done my historic testing and know that I have a statistic advantage over the market when performing analysis in this way. So now what are we paying attention to on the pound dollar? We had that prediction of a possible counter trend bounce from 1.28 last week. Didn't work out very well. Now this market's just in a period of consolidation. So this is something else that's okay to realize too, guys, is that sometimes you're not going to know what a market's going to do based on trend and structure. Now, what I can tell you I'll be looking for is that if we get up to this major level of resistance, that's a level I'll look for possible shorting opportunities. If we get down to this major level of support that's been tested multiple times, that's a place I'll look for long opportunities. This support and resistance level are the only two places I really want to be looking for trading opportunities here on the pound dollar because of this period of consolidation we're currently seeing on this pair, at least on the daily time frame. So let's go ahead and move on now. We'll take a look at our next pair, which is the dollar yen. We ended up with a long trade out of the EAP last week on this pair. I'm actually going to drop down to a smaller time frame and share that with you guys as well. Same understanding of technical analysis helped with this specific trading opportunity. We knew that we had just reversed trend. Let me show you guys that. We have this downtrend. We're pushing down, pushing down, pushing down, pushing down. And then all of a sudden we get this period of consolidation. We also get a break of resistance right here, pushing us into a possible uptrend. It's not an uptrend yet. We don't have a 1, 2, 3 move, and we get this price leveling out area right here along with this period of consolidation. What we were looking for at this point, and again, remember, part of technical analysis, you want to understand trend, you want to understand structure, you want to understand price action, candlestick patterns, and indicators. Well, at this point, we know that based on our trend and structure analysis, we have resistance here, support here, which means we're in a period of consolidation. And understanding consolidation is going to be tied in with trend on that diamond of mastering technical analysis we looked at the beginning of the video. So knowing that we're in this period of consolidation, what can we ask ourselves? What would happen? What can we assume from this? Well, we can assume that the breakout of this period of consolidation will determine the likely direction that the market could go. So if this market would have broken out to the downside, we definitely would have been looking for short trades right here. We were prepared for that. But instead, this market broke out to the upside, breaking this resistance level of this period of consolidation, then pulled back right into that resistance level, which is where we decided to take a trading opportunity in the EAP training program. I'll put a screenshot of that trade to the left-hand side of your screen so you can see the email analysis on that we sent out to everyone involved in the program last week. And as you can see, this ended up being a pretty good trading opportunity. And now, let's zoom back out to a daily chart and go ahead and talk about what we're expecting next based on our technical analysis here on this pair. Well, we're coming into this zone of structure here, which has been tested multiple times in the past. Even though we are considering the dollar yen in an uptrend currently, this zone of structure is very important. This zone of structure could definitely cause another little downtrend pop on lower time frames, could cause another push down counter trend move out of the dollar yen before we can see this level being broken. Overall, because of the trend and momentum of the market, understanding trend, we know that we have a likely scenario of this level of resistance being broken, but being this strong of a level, and I'll show you why we consider this an extremely strong level. It should be pretty obvious looking left. This level has provided resistance for this market multiple times in the past. Being this strong of a level, we can still expect to see some type of counter trend bounce on a lower time frame, maybe even a little period of consolidation right here before the breakout above this previous level of resistance. So that's what we're expecting out of the dollar yen. Let's go ahead and move on now, which is going to be the dollar Swiss. And last week on the dollar Swiss, what we had a prediction of is either a counter trend bounce from this level, pushing the market down, which is really what we expected. Although that did not happen, we also mentioned that if we got a break above this level of resistance here, that it's quite possible for us to see a pullback into that major level of resistance using that technical analysis mastery understanding that we have, and understanding that this level of resistance would likely act as support and push the market up into trend continuation. I actually have a clip from last week's video to show you really quickly of this, so take a look at that and I'll be right back. Swiss. Now, let's say that doesn't happen. The point of trading, the point of having a trading plan is to be ready for whatever the market's going to do. So what if the market throws something completely unexpected at us, and instead of a counter trend push down, we see this market start to break above this resistance level here? Well, it's quite simple. If that's the case, we're going to be using our structure rules that we know. Again, if you don't know a lot about structure or trend, check out that free reversal training in the link in the description. But we know that that area of resistance is likely, if broken, going to turn into support. So that's what we can expect if we see a break of this resistance level, if we get an entry at this level. All right, so as you can see in that clip, that was our exact expectation. Other than that counter trend move, which actually did not happen, was that if this market broke above this resistance level, that pullback and then trend continuation on the dollar Swiss. Again, guys, I really hope that this video has helped you to have a mastery level understanding of technical analysis. We do videos like this each week, so make sure you're subscribed for those. We also have that free training available that will teach you the foundations of technical trading with the exact ways that we define structure levels and trends in the market. And if you're ready for some more advanced training, we also have the EAP Training Program, which is our flagship program we've ran for a couple of years here at the Trading Channel that's already helped hundreds of traders on their path to becoming professional traders. In that course, we take you step by step through the entire process of building a trading plan. You also receive the email analysis I was talking about earlier in the video, 3 to 5 times a week of trades we're planning to take to help you better understand the way we see the market. So if you're interested in that, there's also a link in the description for the EAP Training Program. If not, that's okay too. Again, make sure you're subscribed. Make sure you click the like button if this video was helpful. Hopefully at this point, you are one step closer to being a technical analysis master. Talk to you guys soon.
Yeah.